President Trump demanded that the Federal Reserve cut interest rates. Today, they said no. In fact, the Federal Reserve chairman appointed by Trump said this.
With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance.
And because they are, as you just heard, in no hurry, today the Federal Reserve decided to keep interest rates steady at 4.25% to 4.5%. This comes after the Fed cut interest rates by a full percentage point over their last 3 meetings in 2024. Now, before I tell you more about why the Fed made this decision to hold rates today and what the future of your interest rates will be and what Trump's role will be in all of that, I want to thank my Substack subscribers for voting for this story as the bonus this week. Now, I do not accept story requests from anyone except from my paid subscribers. They are the only ones who get a say in the stories I cover through their vote. So if you want to join them and you want to vote too, make sure you become a paid subscriber on my Facts HQ Substack. Okay, so why did the Federal Reserve decide to keep interest rates steady? Well, because of the data. The Federal Reserve has 2 goals. 1, to keep prices stable, and 2, to ensure maximum employment. And while both are headed in the right direction, neither are there yet.
We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal. And that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance. And I'd say you look at the last couple of inflation readings and you see, more positive readings. So I think policy is well positioned.
But there's a wild card in the mix, a new president. Now, the Federal Reserve chairman said it's not uncommon to have uncertainty in the economy when a new president comes into office and starts enacting new policies. But with Trump, while Chairman Powell did not call him out by name, he certainly listed all of the Trump policies that could impact the economy and your interest rates in the future.
We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do.
Regardless of the realities of the Trump policies, Chairman Powell says no president will tell the Federal Reserve what to do with interest rates.
We study the data, we analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people.